This one always makes me smile. It's pretty funny so that the advice is stay away from the stock market and do not worry about the economy and everything we read or hear about every day. If you are in the financial market, you read about the economy and you read about the stock market and the swings and stuff. So what does it mean? We'll dive into that a little bit. But I begin with a quote from somebody you know. He's not in the financial market, but it goes to with the subject, the matter at hand. Only two things are infinite: the universe and human stupidity. And I am not sure about the former. So I don't know if he was talking about the stock market, but sometimes we see craze, we see speculation, and speculation sometimes it is obvious, sometimes it is not that obvious. I'm I will try to tell you that story that was told by Warren Buffett in one of his writings. I don't remember if it was a shareholder letter or but he recounted the story. That's why I put always the plane there to make me remember to tell the story. The quote he used a lot is those who do not remember the past are condemned to repeat it. It is from George Santayana. I have read it in one of Buffett's letters to shareholders. And we tend to forget about the past. We tend to remember the last 6 months, last year, something about the past, but we don't go there often. And he recounts that story of two guys, two huntsmen who went on a hunt trip together in with a conductor to fly the plane, a pilot, yes, and they arrive there and then they're there for a week. So they go hunting for a week, and then after a week, the pilot come back with the plane, and he take back the two guys with the luggage, and they're two killed. That was chevreuil. How do you say chevreuil? It was two deer. Yeah, two deers. And but they had a third deer. So the pilot say no, just one deer each, not three deer. It would be too heavy. So the two guys, yeah, but we killed it and we prepare to pay the extra money. So each of them give $500 extra to the pilot so they can take the third deer with them. Um, he take the money, he put the deer into the plane, and then put the plane at the back of the lake, and then put the motor full throttle, and try to take off from the lake. And then at the end of the lake, just when he was trying to take off and go over the trees, you know what happened? What happened is the plane was too heavy. Go and then he tips, he flushed the trees, and then the plane goes badang badang pow, and nobody was hurt though because it was very very slow, but the plane was crashed. The pilot was there hanging out, and the two guys were there like a little bit stunned, and one looked at the other one, and he said, "Yeah, exactly the same place as last year." Even in French, that story, you look, you say, what? So we smile, we smirk, we're not sure about, and I'm telling you, I'm counting you that story because Buffett told it. So why we smile in this stupid story? See, if you did that last year, why did you repeat the same thing this year? Why did you do the same mistake? In that case, it is so obvious, it is so stupid like that the story is kind of funny, corny, and but in the stock market, we will see bubbles and speculation and stuff like that. We tend to buy high and sell low and get caught into the different type of businesses. Right now, I would go about the Bitcoin a little bit later, but right now we hear a lot about Bitcoins and cryptocurrency, and they always refer back to the Tulip Mania of the Netherlands in the 1600s. Actually, it is not completely sure that that story was completely true. It has been extracted from a book of Mr. McKay, and the story goes, and the graphic there is taken from Wikipedia, actually, and it is the Tulip Price Index. Tulip Mania began in 1623 until 1637. It was not that bad for the first years, but then brokers came in, and then speculation came in, and then from 1636 to 37 there was a hype, there was a bubble, and then a burst, and it has been in the public imagination since then. So take it with a grain of salt, but the first remembered bubble came from the Tulip Mania in 1623 to 1637. The second one I want to talk to you about, this one is more real. It was in Great Britain in 1711 to 1720. It was called the South Sea Bubble. It is because back then they were able to exchange some kind of shares of a company. One notable people that has been caught into that bubble was Sir Isaac Newton. And he has said, I can calculate the movement of the stars, but not the madness of men. And that was in direct proportion to that particular bubble bursting. It is said, again in Wikipedia, that he had 22,000 pounds. So back then in the market of that company, the South Sea Company, so 22,000 pound, if you even in today's term, it's $50,000. But if you go back in 1700, that's quite a lot of money. Did he lost it all? Did he lost half of it? Was he able to take it out before? Some suggest that he has lost a big sum of money in that. But even though we talk about Isaac Newton, how he was brilliant, but when he saw that all the speculation and stuff, he's been caught in that too. So that was speculation even in 1700, and it was about a company that was taking boats and was making exchange from North America to from the Americas, not just North America, to Britain about spices and stuff like that. It was a great endeavor, a great thing. They just discovered America. So, but even back then there was some speculation, and you can see the graphic on your screen. We go closer from us now, and it is still a little bit almost 100 years old. But in the 1921, from 1921 to 1929, that decade is known now as the Roaring Twenties. And as you can see, the stock market during the 20s was like the 90s. The stock market was roaring, was going very, very fast, very, very high. There was that new technology of information back then that was striking the imagination of people and trying to find to change the business model. And it was the hottest stock back then was RCA. That was the radio stock. That was a radio company. And it was changing because of the airways, because of the voice that was going through the airways. It was as mesmerizing for people back then as the internet is today, because now with the radio you can have access to free information. So it was very, very a nice time to be alive and to be in the stock market. But then we all know, we have heard of it, that on October 29th, the black market, the Black Monday. But if you look at the graphic, it was not just the one Monday. And for me, I'm teaching that course, so I'm doing some research more than when I was a mutual fund salesman. I thought it was, the 1929, and I heard about the 1930s. But when you look at that, it's 90% of the stock market that vanished from the height. Here on my chart, I have 81 points at the height, and at the bottom it is 41 points. So, and now we know it is around 25,000. But the same Dow Jones was at 389 and went down in 1932 to about 41 points. That's 90%. That was some kind of not just a bubble bursting, but that was a deep, deep depression. So we had some correction. Even in 2008, 2009, we had some correction, but nothing on the scale of 90%. It was in the scale of 30, 35, 40%, 50 in some cases, but nothing like that. And still, after that, we rebounded, but it was some kind of a bubble. Now we continue our journey back. I will not go through all of them, but one of them was the famous bubble that burst, the dot-com era, the bubble that burst after the 2000, the roaring. We had the big 90s, the roaring 90s, and then, as you know, that is closer to you, closer to home. Maybe you have lost some money in that, and then we have like some 50%, 90% decline. Now, what you see right now is the Nasdaq, and that was the decline that we had at that time, at that moment. continue. So we have, sorry for the French, because I've translated everything I can, and everything I will go on the web and stuff, it will be all in English. But I had some newspaper that I have scanned from the time, and being French and in Quebec, in Montreal, it was La Presse and stuff like that. Like, bear with me. Those is just to illustrate some of the bubble we have in the stock market. One of the nicest graphs I've grabbed on the internet was this one from Stock Charts, and it was to superimpose two things that happened in 2000, 2007, 8. On the black, you see the Dow Jones, you see the Nasdaq, just the tip of the Nasdaq, and how it went up and down very fast in those 3 years. And now you superimpose on that, you have the Dow Jones U.S. Home Construction Index. So at the same time that people were taking their money out of the .com, they were putting their money into houses, into concrete, into wooden and real stuff, from the .com to real stuff, and we see a second bubble burst at the same time. So there is always something brewing. We continue our journey. So now we are in the period of 2007, 2009. So we had a great time after that. The stock market went up, but again, the bubble burst. In 2000, from 2007, 2009, the Dow Jones went from 14,000 to 6,600. It's not a 90%, but it's a 50%, more than 50% slash. So that was a crisis. Okay. And now I will go with you to check out the Bitcoin, what we hear about this thing, the cryptocurrency. It's something new, so we'll check it out. So if you have any interest in the cryptocurrency, because I'm thinking, not only thinking, but I'm taking notes and diving deep into that. But if you have any idea of you want to have any idea about cryptocurrency, what's happening right now, I encourage you to go on coinmarketcap.com. It gives you an overview of all the cryptos and takes into account tons of different markets. To be precise, 8,152 markets. Now we are at 1,493 currencies. The best known being the Bitcoin. So you see right now, and the market cap of all those currency right now is about $543 billion. So that's some money's in there. So just to show you 1 minute, I will take this, I think. Yes. So you have a chart for the Bitcoin. Maybe you know, maybe you didn't know. So I hope it is some value to you. So if you look at that right now, you see from May 2013 to September, it was a flat line. There was no bubble there. It was just hanging out. And then all of a sudden, fire catch, something happened, and people began buying more and more Bitcoin. On a year, you can see that, and on a 3-month basis, we can see the Bitcoin in October was at 5,000. It went up at the height of the bubble, or the market. It was at 19,000, and then it's back around 11,000 to the day of recording. Will it go straight back? Will it go straight up? I don't know, but we can see a lot of variation. We can see a lot of bubbling. People can go in and with the same type of emotion that they went in for the tulip, for everything else. I don't see nothing bad in the sense that you are gambling, but that's not really investing, except if you really know what you're doing. But normally that's not what we call investing. We are more in the speculation. And when you go into that, your emotion and your brain is not working all the time at a good speed or for the right reason if you are into the investment. If you want to call it speculation and you want to take a portion, that's completely another story, and it is for another day.